Welcome to Market Views. Show that the in-depth analysis for capital markets. So analysts to join us to take key fundamentals, technical trends. Now, OK Zimbabwe recently published a circular capital raise initiative following the erstwhile circular when it intended to raise 30 million. But in the former circular, it had highlighted to raise 30 million through a rights issue, private placement, and debt financing. But recently, it has highlighted that it wants to raise 20 million through rights offer and 10.5 million through disposal of some of its strategic assets, including OK Mbare, OK Glenview, OK Gweru, amongst part of the assets under its portfolio. Well, looking at TSL, it also reported its half-year financials, reporting a surge of 8% in the revenue, as it was marked by volumes increase across its SBUs. And as of late, we also saw the Zimbabwe Stock Exchange publishing its pre-listing segment. So, who best to unpack some of these issues other than Ian Banda? So today we want to look at these issues and share our views and our thoughts. So allow me at this moment to introduce Ian to the set. Ian, thank you for joining us once again, and looking forward to this conversation.
Thank you, Kuda, for having me on set. It's actually wonderful to be here.
Right. So now let's start with TSL. We have seen TSL recording an 8% surge in the top line, marked by just volumes surging across its SBUs, right? But then, so the first question starts from there. How do you make out of this performance? And looking at its business or its model, let's try as much as possible to make a commentary in terms of its performance, looking at the overall business.
Okay, thank you. So TSL is actually, we can describe it as a value chain business. What do I mean by this? It operates from the production of agricultural inputs to up to the end of the value chain with consumption. So it is about 5 SBUs, which are the agri inputs, with the main brand there being Agricura. Then we have packaging, with the main brand there being Propec. Then we have the marketplaces, where TSL operates the tobacco sales floor, TSF, and is also a shareholder in ZMX, Zimbabwe Mercantile Exchange for Agricultural Commodities. Then it's into logistics with Back Logistics. Then we have the infrastructure segment, which is TSL Properties. So the volumes improved across all the chains. If we look at agri inputs with Agricura, we saw that in insecticides and fungicides volumes were up. With we saw fungicides and pesticides up to over 200% in fungicides, and insecticides were up around 3%. Then the animal health remedy segment was also up above, in excess of 200%. This was also as a result of them launching a new manufacturing plant in November 2024. Then on Propec, we saw volumes up with the tobacco. Zimbabwe had a good tobacco season.
Sure.
So Hasten paper volumes were up around 8%. Then the tobacco packaging paper was up 6%. Yes. Then also we moved to TSL, where the contracted tobacco flows volumes were up around 8%, with independent auction volumes also up 18%. So we just see in general that the volumes were improving across the whole segment. ZMX volumes haven't yet picked up. I think it's a problem with most commodities being under contract farming arrangements. And also the government of Zimbabwe mandating that some commodities like maize are sold directly to GMB. So farmers have not really used the ZMX platform that much. Then moving to TSL Properties, we saw that occupancy was around 94%. Void levels remained stagnant at around 6%, which is very low. and the total dotable space was up around 9%.
Okay, thank you. Now, looking at that, we have heard that during this current season, the tobacco sales are at its all-time high, right? Being estimated to surpass the 320 million kilograms, with other projections actually estimating that very soon we are likely in Zim to surpass or even to reach 400 million kilograms, right? So looking at TSL, what does this mean to TSL?
For TSL, I think we'll look at the packaging segment, because this is where the packaging and sales marketplace segment, if I may say, this is where they operate on the tobacco sales. So with the large volumes of tobacco anticipated to move on the auction floors, I think we'll see the Hyson packaging paper volumes increasing at end of year from the 8% we have witnessed half year, and also the tobacco packaging paper will improve. And I think many of the auction floors currently they are at 14% of the market share of all. So I think it will improve to around maybe 20 or so percent.
Right. Now, net finance cost ballooned by 50%. Any cause for concern from a shareholder perspective?
Okay, we must first look at what really caused the increase in net finance cost. We saw that there was an increase of around 14 or so percent in non-current liabilities. So we see short-term borrowings increased.
Yeah.
So we all know that with short-term borrowings, the interest rate is usually higher. So I think that was a result of that. And we also witnessed that in the current financial year, interest rates have increased to around 15% per annum. So I think that caused the ballooning of the interest expense line. But I don't think it's a cause for concern, because from the analyst briefing we had that the company is trying by all means to not increase its debt, but also use its current cash flows for future obligations and limit its gearing.
Okay, thank you. Now let's shift to the retail giant, Zim. So initially we saw on the circular they intended to raise 30 million through a rights issue, through private placement, and through debt financing. But the circular that they released last week, it actually sort of like shows a change in the structure of the capital raise for only two, with 20 million being raised by issuing of, I think, 1.8 billion shares, right? Translating to 20 million, and 10.5 million now being raised through disposal of some of its assets, such as Gueru, Plainview, right? So the question is, what do you think is resulted in the group changing its proposed capital raising strategy?
Zimbabwe is facing severe liquidity constraints. So private placements and debt negotiations take time, which Zimbabwe doesn't have. Because the processing involves rigorous due diligence processes and negotiations. And previously, if we look at around the year 2010, also did a rights issue. So they've decided to go the way which they know. Yes, they raised also about 20 million in 2010. So this is a repeat of a strategy that has worked before for them. So that's why they decided to go the rights issue. And the company is also severely geared, if I may say, or its liquidity constraints are very high. They owe around 24 million to suppliers. So you cannot go around actually asking for more debt when you are failing to repay the current debt that you have. Yeah.
Okay, no, thank you. That's actually insightful right there. Okay, now, what is the likelihood that they will raise this amount? Because this is the plan, right? It might work, it might not work. What's the likelihood that they are able to raise this 30.5 million? And what is the likelihood of it returning back to its former glory?
Okay, there's a very high chance that they are going to be able to raise all the money they need through the rights issue. Why am I saying this? 36% of the people, okay, 36% of the shareholders have actually provided bank guarantees to actually say they'll exercise about 16.7 million of their rights. So that's 16.7 million, which is already guaranteed that is going to be raised. Then we have around 37%, or actually 37% we have provided bank guarantees. Then 36% you have actually provided irrevocable rights. Sorry about that.
No, it's fine.
Yeah, irrevocable commitments to actually say they are going to provide around 7 million.
Okay.
So this is 73% of the shareholders who are actually saying who exercise our rights, and that's equivalent to around 23.4.3 million that they are going to raise. Then they have properties also that they want to sell, and these properties, from the properties, they want to raise about 10.5 million.
In your view, is it prudent?
I think it's prudent. The properties have a market value of over 20 million. Okay, so it means that they can choose which properties have the highest chance to be disposed early to raise the funds they need. Then to answer your second question, that will be able to go back to its former glory.
Yeah.
I think this is a 50-50 chance. Why am I saying so? The main problems why is in this, we see that there was poor cash flow management. They negotiated with their suppliers late. Then also there are market dynamics that were at play. We saw that the exchange rate volatility, inflation. So I think from a management perspective, they've brought in seasoned and experienced management back, and through voluntary laying off, the other executive was laid off, and the board is going to change with the current acting CEO, Mr. Zereva, going to be the executive chairman for the next 3 years for the board. And those seasoned executives they brought back, I think they're going to be with the company until year end. So I think those people coming in, they'll steady the ship, and we'll see some improvements. But will it be back to its former glory? The challenge is that the informal market is growing. The tech shop economy is thriving and is growing every day, proving very competitive to the formal retailer. On market dynamics, yes, the exchange rate has been fairly stable, but it's not guaranteed. Inflation is still around, it's not going anywhere. We have tight liquidity constraints in the market. So I think it's a 50-50% chance. It's a gamble in my view.
No, thank you. That's an interesting view. So just before we round it up, I'm sure you also saw the Zimbabwe Stock Exchange publishing a pre-listing statement with ZSE Holdings Limited intending actually to list the already issued out shares by way of introduction for the Zimbabwe Stock Exchange main board. So let's just unpack this. What does this mean, and why listing on the bourse in your view?
Okay, I'll first answer the last question. Why listing? So we see they are just following precedent. The New York Stock Exchange, the Nasdaq, they are all listed on the exchanges. They trade on the exchanges. Even the LSE, the London Stock Exchange. So it's just following precedent of other good exchanges that are trading on their platforms. So what does it mean, listing by introduction? It just means that the ZSE is not issuing any new shares to the public. They are just listing the current
or those shareholders already
in holding. Why are they doing that? This will allow the current shareholders to actually trade their shares, get some liquidity if they want to exit. Also, it enhances the perception of the Zimbabwe Stock Exchange, and it's 100% listed subsidiary, the Victoria Falls Exchange. In future, if the ZSE wants to raise capital maybe for some improvements to actually improve its platforms and all that, they can also do that through maybe rights issue also new shares on the stock exchange.
And they will also adhering to the same listing rules that all the companies that are listed are abiding by.
Exactly, enhancing the governance issues.
Thank you so much. Wow, that was an insightful session. Thank you so much, Ian, for time and for sharing your views and some of the things that we were.
Thank you, Koda. It was a pleasure to be here.
Yeah, my pleasure as well. Thank you, our audience, for being with us. We actually do not take it lightly that you spare some of your minutes just to get to hear some of the things that we do share here. So, yeah, please do share some of the material and the content that we're sharing with you. Like our pages. Do follow us even on Twitter. We have our page there, ZFN Market Views. And yeah, we are recording these sessions every Monday at 3 p.m. So please do tune in so that we continue having these conversations. But for now, this is the end of our recording. We do wish you all a very good day and a productive week. For myself and the crew behind the scenes, thank you and we say bye.